So, I mean, in the global space, of course, that's where this tariff war is starting from. We can expect a whole lot different from that, can we? Willie Bong has the global news now. Will, I know you come with stories of
tariffs,
Trump tariff,
and more tariffs.
And more tariffs.
And he describes it as a beautiful thing. So
Yeah.
let's just enjoy it.
Yeah, I know. After Liberation Day, yes.
Oh, yes, probably after Liberation
All
Day.
right.
So we see major Asian stocks today. Let's just talk about what happened, reaction we got from that plunged on Monday as Donald Trump stood firm on tariffs, fueling fears of a global recession. Now, Japan's Nikkei tumbled 6.6%, Chinese blue chips lost 6.3%, and Taiwan's market sank nearly 10%, triggering short-selling limits. S&P 500 and Nasdaq futures also dropped over 3%, dragging down Europe. Oil prices slid, with Brent falling to $64 per barrel, while investors rushed to safe havens, pushing U.S. Treasury yields lower. Now, markets now expect the U.S. Fed they could cut rates up to 5 times this year, with the first move possibly by May. Now, not spared from this is Bitcoin. Bitcoin dropped by 6% to $77,730. And Sunday evening, joining a global market rout triggered by President Donald Trump's sweeping tariffs, the cryptocurrency is now down 28% from its January all-time high. Over $247 million in Bitcoin long positions were liquidated as traders scrambled to cut losses. Ether and Solana tokens have plunged about 12% each. Now, look at crypto drop followed at $7.46 trillion loss in global stocks over 2 sessions, and we know that this is driven by recession fears and escalating trade war concerns. Bitcoin is now down 15% year to date, mirroring broader risk-off sentiments. Still on, President Donald Trump is saying that his new tariffs are a beautiful thing and the only way to fix America's trade deficit to China and the EU. In a social media post, he dismissed any plans to negotiate with China unless the U.S. trade gap is resolved, calling tariffs medicine for the economy. In his words, sometimes you have to take medicine to fix something. Now, his remarks follow a sharp global market sell-off. Nearly $4 trillion has been wiped off global markets since Wednesday. China has retaliated, and the EU is preparing its own response, fueling fears of a deeper market crash this week. Now, Goldman Sachs has raised recession risk to 45% from 35% for the U.S. after President Trump's announcement of sweeping tariffs, including a 54% tariff on China. Looking at what's happening there, we see that the bank warns that tighter financial conditions, global backlash, and policy uncertainty could hurt business spending and economic growth. If fully implemented, the U.S. may enter recession by late 2025, with GDP growth dropping to 0.5% in the 4th quarter. And in response, Goldman is expecting the Federal Reserve, as many analysts are expecting, to cut rates starting in June with up to 200 basis points in the full recession. Now, American billionaire hedge fund CEO Bill Ackman is warning that Trump's tariffs could destroy investor confidence, isolate the U.S., and damage its global reputation. He urged Trump to pause and negotiate fair trade deals. Ackman also flagged the potential conflict of interest involving Commerce Secretary Howard Lutnick. Global markets have already lost, as I mentioned earlier, $4 trillion due to escalating trade war fears. Now let's move on to Germany now. Industrial production fell 1.3% in February, exceeding expectations of a 1% decline, highlighting challenges for the sector. Now, the drop was mainly driven by construction, with food and energy sectors also contributing to the downturn. Now, this comes ahead of new pressures from U.S. President Donald Trump's aggressive trade policies. Move on to Israel now. The central bank is set to keep rates at 4.5% for the 10th consecutive time amid a weakening shekel and the war's economic impact. The decision comes as the bank faces rising U.S. tariffs, adding pressure to an already fragile economy. Analysts expect the Bank of Israel to maintain the current rate on Monday, that's today. Now, joining us to have more discussions on the global trade tariffs is our correspondent in London, Juliana Olayinka. Good morning, Juliana. It's good to have you on the program.
Good morning, Will.
Juliana, we've already seen a bloodbath and shockwaves for global markets. This reaction is considered unprecedented, looking at how fast and significant the amount lost is $4 trillion.
Absolutely, Will. I think you've used the correct descriptive term to call it unprecedented. And it's 5 years ago, 6 years ago, on this exact program, we were using the same descriptions to describe the bloodbath following the COVID-19 lockdowns. And I think it feels as serious as that. This is pretty serious. As you said, trillions of dollars, pounds, yuan, euro, whatever currency you use, it is being lost on the stock markets. In fact, today, of course, is the third trading session since these tariffs were impositioned. And in the first 10 minutes of the FTSE's opening this morning, they lost about 6.7%. It is alarming and it is worrying, and it does have global ramifications. I think the reason why a lot of us are taking this as a joke is because most of us don't trade, but this is absolutely going to trickle down to consumers, to normal everyday people. And unfortunately, we know that those in less developed countries who rely too much on the dollar are going to be affected. So yes, pretty serious declines. I think in the UK, we haven't been hit as badly as we've seen in Germany. Of course, Germany, very export dependent country, particularly with their big cars. We all know the big cars that come from Germany. And France has also been affected, but still very significant. We're all waiting for the Prime Minister, Sir Keir Starmer, to speak. He has given an address much later today. And of course, the markets are going to be hanging on to his every word.
The markets really are hanging on to everyone. We want to know what he'd like to say, because we know that he says he's ready to shield the UK businesses from the fallout of the US sweeping tariffs. But we know that UK has been hit by, the auto industry has been hit by the 25% tariff. What do you think his words mean when he says it's going to shield the businesses in practice? And how does he plan to soften the blow also? Does he have no plans for retaliation, as we've heard from, maybe say, France president?
Good questions there, Will. At the moment, no plans for retaliation. What we do have, and what we know from this morning, is that Lord Mandelson, the UK ambassador to the US, he is going to be hosting a series of high-level talks in Washington, in the White House, over the next couple of days. And even in some of the rhetoric that's come out from Lord Mandelson, it's all about trying to appease the US, talking about ways in which they can soften the blow. No details just yet. But very interesting that you mentioned the auto sector. We just heard this morning from Tata Motors, who are the kind of the parent company of Jaguar Land Rover. We all know Land Rover, Range Rover, very popular in Nigeria. Now, they have this morning said that they are going to be ceasing imports into the US. That is going to have major ramifications on the car sector and on jobs in the UK. We also had the Transport Minister, Heidi Alexander. She was on the airwaves this morning talking about the electric vehicle industry and the fact that a ban that was due to come in 2030 for petrol and diesel cars is going to be extended. Lots of talk about that. Are there going to be potential tax relief or subsidies? These are tax breaks or export credits for affected manufacturers, or targeted financial support. This is what is being chipped away in cabinet as we speak. But certainly it does feel like there's a lot of panic in the markets at the moment. Obviously, we know panic does die down. But as we said, this is pretty serious. I think everyone now is just waiting for Wall Street to wake up.
Really, Wall Street needs to wake up, especially now. Let's just look away from those tariffs, but we can't look away from the tariffs because you see that UK house prices, another sector in the UK, which has, taken a hit for a second month now, falling now. We can't say the auto industry is being impacted now. The housing sector, we can't, totally disassociated from what's happening in the global space, can we?
No, not at all. I think, I think it's really important to emphasize that these tariffs are going to have major ramifications. This is not just, a meme or a trend where we laugh at some of these announcements. This is really significant, and I know it's going to have major effects in Nigeria. But going to the UK house prices, you're absolutely right. We've had data released by Halifax this morning showing that house prices in the UK fell 0.5% in March, and this follows a 0.2% in February. The average property price in the UK is about £300,000, double that if you want to live in London. I think away from kind of Trump, a lot of this has got to do with stamp duty changes that were announced in Rachel Reeves's autumn budget. So because the changes were coming into fruition on the 1st of April, a lot of buyers rushed to complete purchases. So I think that's can be attributed to one of the declines.
Okay, great. So give us your parting words. What are the expectations for this week for the markets and the economy in general?
We don't want to head into a global recession. I think in the UK, we're very much kind of shielded away from being so dependent on the US dollar, so dependent on UK exports into the US. And of course, we have that as has been coined recently, this special relationship. But certainly, we're also interconnected and interwoven. And yes, we want the year to go in a positive way, Will, not in such a negative way. So I think all lines, all data this morning is going to be, over the week, is going to be targeted towards the White House. And let's see what happens if big business in America is going to be able to save the world from a recession.
Thank you so much, Juliana, for your thoughts and perspective on the program. Thank you so much again.
Thanks, Will.
And you heard Juliana's expectations, and one thing she said is Wall Street has to wake up, because especially now we see the CEO and the American billionaire investor, hedge fund investor, saying that Trump's decisions, Trump's tariffs are making billionaires or investors lose confidence.
And we've seen Elon Musk, President Trump's friend, even losing some millions of dollars.
Of course.
So
it's hurting his circle as well. But he said we need to take medicine, to get better. And when you take medicine, you have to wait a while to see the results.
All right.
So maybe we'll just see how this plays out.
And keep our fingers crossed.
Keep fingers
as
crossed.
usual.
As usual.